It's interesting you point that out because I just recently sent out some numbers, a worksheet to a homeowner looking to get an equity loan to build a pool. And in their case, I showed them both HELOCs and a HE loan. And one of the things I'm seeing in terms of inquiries about equity loans is more focus on the HE loan. Again, the HE loan is just a traditional fixed rate mortgage. It's not a line of credit, so you don't get to draw on it from time to time. You get all your money at once. But when you think about it, in this particular homeowner's case, they had a specific need. They want to build a pool. And they're not really looking for the HELOC to be some sort of rainy day fund that they're going to tap into later. So in that regard, I sent them a worksheet where they had a lot of equity, good credit score. I was able to send them a worksheet with a 20-year fixed second mortgage for $100,000 at 7.6%.
Wow.
That's pretty darn good when you consider that first mortgages are, in the mid sixes. Second mortgages are going to carry a higher rate than a first because they're in second position. There's more risk to the lender. But when you get that kind of spread narrowing to what is basically slightly over 1% from the first to the second, that's a pretty good outcome. And our HELOC lender that we use most of the time now, depending on credit score and the right loan to value, we can actually offer HELOCs at prime rate, which is what most HELOCs are tied to as the index, prime rate plus zero margin over that rate. Now, with that being the case, that means HELOCs could be as low as 7.5.
Wow.
And to the extent you're looking at a HELOC, if the Fed does start ramping up rate reductions for the rest of this year, that's going to directly help you as a HELOC borrower because you're probably going to have a HELOC tied to prime. And every time the Fed funds rate goes down, unlike a 30-year mortgage, the prime rate immediately reacts to the Fed funds rate movement. So if the Fed funds goes down a quarter, the prime rate goes down a quarter, your HELOC loan rate is going to go down by the same amount immediately. Again, that's not like a 30-year fixed mortgage. So they're two different things. But if you know that, that could be a reason why looking at a HELOC now, if you've been holding off, is probably a good thing to do.